What is happening, Crypto Nation? Welcome back to Bitcoin Bulletin, your ultimate source for the pulse-pounding news shaping our digital asset world. The market is moving at lightning speed, and if you're not plugged in, you're missing out. We've got a packed show today with updates that could redefine your investment strategy. Get ready for a deep dive into market shifts, major player moves, and what it all means for you. You won't want to miss a second of this as we break down the headlines that matter. So strap in, stay sharp, and let's get right into it. First up, we're dissecting the intricate dance of market volatility and exploring how seasoned investors are positioning themselves for long-term success. We'll be looking at strategic entry points and how to leverage the power of Bitcoin and Ethereum in today's unpredictable climate. This is essential viewing for anyone looking to build lasting wealth. Then, we've got a major development in the corporate crypto space. A significant lawsuit involving a major player has just been dismissed. We'll unpack what this means for investor confidence and the broader implications for companies navigating the complex world of digital assets. This is a story you need to hear. And we're not stopping there. We're also diving into the surprising pronouncements from a prominent public figure regarding cryptocurrency, alongside a crucial look at the evolving crypto landscape in Asia, marked by geopolitical shifts and differing regulatory approaches. Plus, we'll give you the smart moves for smaller investors looking to survive Bitcoin's notorious volatility. Stick around, because this is all happening right now. Don't forget to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. Navigating the peaks and valleys, smart strategies for crypto investors. The crypto market, notorious for its dramatic price swings, presents both exhilarating opportunities and significant challenges for investors. In this dynamic environment, understanding how to identify strategic entry points and leverage major digital assets like Bitcoin and Ethereum is paramount for achieving long-term financial goals. This isn't just about riding the wave, it's about mastering the currents to ensure sustainable growth. Bitcoin and Ethereum, as the two largest cryptocurrencies by market capitalization, often dictate the broader market sentiment. Their price movements can be influenced by a myriad of factors, including macroeconomic trends, regulatory news, technological advancements, and shifts in investor sentiment. For long-term investors, the key lies in developing a robust strategy that accounts for this inherent volatility. This involves meticulous research, a clear understanding of risk tolerance, and a commitment to a disciplined investment approach. One of the most effective strategies for capitalizing on market opportunities is identifying strategic entry points. This doesn't mean trying to perfectly time the market, which is notoriously difficult, but rather understanding the underlying value drivers of these assets and entering positions during periods of relative undervaluation or consolidation. Technical analysis, which involves studying price charts and trading volumes to identify patterns and trends, can be a useful tool. Indicators such as moving averages, support and resistance levels, and relative strength index, RSI, can help pinpoint potential entry zones. However, technical analysis should always be complemented by fundamental analysis, which assesses the intrinsic value of an asset based on its technology, adoption rates, and the strength of its underlying network. Leveraging Bitcoin and Ethereum for long-term gains requires a forward-looking perspective. It means looking beyond short-term price fluctuations and focusing on the potential for these assets to disrupt traditional financial systems and become stores of value or mediums of exchange. The ongoing development of the Bitcoin network, such as the Lightning Network for faster and cheaper transactions, and the Ethereum network's transition to proof-of-stake and its ongoing upgrades, like the move towards sharding, signal a commitment to scalability and efficiency. These technological advancements are crucial for wider adoption and, consequently, for driving long-term value appreciation. Furthermore, a well-diversified portfolio remains a cornerstone of sound investment practice. While Bitcoin and Ethereum may form the core of a crypto allocation, spreading investments across other promising digital assets, as well as traditional asset classes like stocks and bonds, can help mitigate overall risk. This diversification ensures that a downturn in one asset class does not disproportionately impact the entire portfolio. For those focused on long-term accumulation, strategies like dollar-cost averaging (DCA) are invaluable. DCA involves investing a fixed amount of money at regular intervals, regardless of the asset's price. This approach naturally leads to buying more units when prices are low and fewer when prices are high, effectively averaging out the purchase cost over time and reducing the impact of market timing. Ultimately, navigating a volatile crypto market for long-term gains is an exercise in patience, research, and discipline. By understanding the fundamentals, employing strategic entry tactics, diversifying wisely, and sticking to a long-term vision, investors can position themselves to benefit from the transformative potential of digital assets. But what happens when the big players make a move, and how does that impact the everyday investor? We're about to find out. We're diving into a major lawsuit that just got dropped, and the implications are huge. Lawsuit dismissed. Strategy settles investor claims amidst Bitcoin accounting scrutiny. A significant legal battle involving major crypto entity Strategy and its investors has reached a conclusion, with plaintiffs voluntarily dismissing their class action lawsuit. The case, which centered on allegations of misleading statements regarding the company's Bitcoin profitability and accounting practices, was filed earlier this year and has now been dropped with prejudice, meaning the claims cannot be relitigated. This development sheds light on the complex interplay between cryptocurrency holdings, financial reporting, and investor expectations. The core of the lawsuit revolved around Strategy's pivot to a fair value accounting standard for its substantial Bitcoin holdings. Previously, the company recorded its Bitcoin at its original purchase cost, allowing for write-downs due to price drops but preventing the booking of gains unless the assets were sold. The switch to fair value accounting meant that quarterly fluctuations in Bitcoin's market price directly impacted the company's balance sheets, allowing for the recording of both gains and losses based on market value. Investors who initiated the lawsuit argued that Strategy had misled them by overstating the positive impact this new accounting method would have on its reported profitability. They pointed to the company's first quarter 2025 net loss of $4.22 billion, which occurred despite a significant surge in Bitcoin's price during the preceding 6 months, as evidence of this alleged misrepresentation. The dismissal of the lawsuit comes at a time when Strategy faces broader scrutiny over its business model and financial disclosures. A prominent Wall Street advisor recently criticized the company for comparing its price-to-earnings (P/E) ratio to tech giants like Apple and Nvidia, calling the comparison 100% fraudulent. The advisor argued that Strategy's recent performance was primarily driven by a one-off increase in Bitcoin's price rather than sustainable business fundamentals. This criticism highlights a growing tension between traditional financial metrics and the unique characteristics of companies heavily invested in volatile digital assets. While the attorneys for the plaintiffs have not yet provided a detailed explanation for dropping the claims or confirmed if a settlement was reached, the dismissal itself signals a potential shift in the legal landscape for crypto-focused companies. The lack of immediate comment suggests that the terms of the dismissal may be confidential or that the plaintiff's legal team has decided to pursue other avenues or reevaluate their strategy. The implications of this dismissal are far-reaching, potentially impacting how other publicly traded companies that hold significant amounts of cryptocurrency report their earnings and communicate their financial health to investors. This case underscores the challenges faced by companies that integrate digital assets into their core business models. The novelty of crypto accounting standards and the inherent volatility of assets like Bitcoin necessitate clear and transparent communication with shareholders. As the market matures, regulators and investors are demanding greater clarity and adherence to established financial principles, even when dealing with unconventional assets. Strategy's experience serves as a case study in the importance of managing investor expectations and ensuring that financial reporting accurately reflects both the opportunities and the risks associated with cryptocurrency investments. From corporate boardrooms to global stages, the influence of crypto is undeniable. But how is it playing out on the international scene? we're looking at the growing crypto scene in Asia and the surprising stance of a major public figure. Global crypto currents, Eric Trump's stance and Asia's regulatory maze. The cryptocurrency landscape is increasingly shaped by a complex interplay of individual pronouncements and evolving geopolitical and regulatory frameworks. In a notable development, Eric Trump has expressed a bullish outlook on Bitcoin, signaling a growing acceptance and awareness of digital assets among prominent public figures. This sentiment, coupled with significant shifts in the cryptocurrency adoption and regulation across Asia, paints a vivid picture of the global diversification and increasing institutional interest in digital finance. Eric Trump's positive remarks on Bitcoin contribute to the ongoing narrative of mainstream acceptance for cryptocurrencies. As a member of a well-known business and political family, his endorsements, even if informal, can influence public perception and encourage broader consideration of digital assets as a legitimate investment class. This follows a trend where public figures and influential business leaders are increasingly engaging with and commenting on the cryptocurrency market, lending it a degree of mainstream credibility. Simultaneously, the Asian continent presents a fascinating case study in regulatory divergence and rapid crypto adoption. Countries like Singapore and Japan have established relatively clear regulatory frameworks, fostering innovation and attracting significant investment in the blockchain and cryptocurrency sectors. These nations are often seen as pioneers in creating environments where crypto businesses can thrive under defined rules, promoting investor protection while encouraging technological advancement. Conversely, other regions in Asia are navigating more complex regulatory waters. China, for instance, has maintained a stringent stance against cryptocurrency trading and mining, although it continues to explore central bank digital currencies, CBDCs. Vietnam has shown interest in regulating cryptocurrencies, recognizing their growing prevalence, but the specifics are still being developed. The Philippines, on the other hand, has seen a boom in crypto adoption, particularly driven by play-to-earn gaming, prompting regulators to consider appropriate oversight. This divergence in regulatory approaches creates both opportunities and challenges. For businesses and investors, navigating these differing landscapes requires a nuanced understanding of local laws, compliance requirements, and market dynamics. Geopolitical tensions can also indirectly influence these trends, as countries reassess their financial sovereignty and the role of digital assets in the global economy. The rise of stablecoins and the potential for cross-border digital payments further complicate the picture, as governments grapple with monetary policy implications and capital controls. The growth of cryptocurrency in Asia is not just about trading. It's also about innovation in areas like decentralized finance, DeFi, non-fungible tokens, NFTs, and blockchain-based gaming. Emerging markets are seeing a rapid uptake of crypto as a means of financial inclusion, particularly in regions where traditional banking infrastructure is less developed. Startups are actively exploring solutions for crypto payroll and stablecoin salaries, indicating a move towards integrating digital currencies into everyday economic activities. In essence, the global crypto narrative is increasingly multifaceted. While figures like Eric Trump add a layer of public visibility, the real engine of growth and change is being driven by the diverse regulatory environments and the innovative spirit found across different regions, particularly in Asia. Understanding these varied approaches is key to grasping the future trajectory of cryptocurrency adoption and its impact on the global financial system. But with all this big-picture movement, what about the everyday person trying to make sense of it all? We're shifting focus to survival tips for the smaller investor in a volatile market. Fortifying your portfolio. Essential strategies for retail investors amidst Bitcoin volatility. The cryptocurrency market, characterized by its exhilarating highs and gut-wrenching lows, presents a unique set of challenges, especially for smaller retail investors. When large holders, often referred to as whales, initiate significant sell-offs, the resulting price drops can trigger a cascade of fear and panic among less experienced market participants. This article provides a survival guide, detailing smart strategies designed to help individual investors navigate these turbulent waters and protect their capital. The term whale in the crypto space refers to individuals or entities holding a substantial amount of a particular cryptocurrency, often enough to influence market prices. When these whales decide to liquidate large portions of their holdings, it can create a significant sell pressure, leading to rapid price depreciation. For retail investors, who typically have smaller positions and less capital to absorb losses, these events can be particularly daunting. A substantial sell-off can lead to a liquidity shock, causing prices to plummet swiftly. This often triggers a fear-driven reaction from retail investors, who may sell their holdings at a loss, exacerbating the downward trend and creating a self-fulfilling prophecy of market downturn. A recent example illustrating this dynamic was a reported $2.7 billion whale sell-off that caused Bitcoin's price to drop by 24% within minutes. Such rapid and significant movements highlight the market's sensitivity to large-scale transactions. Retail investors, often caught off guard, may feel compelled to exit their positions to avoid further losses, even if their long-term investment thesis remains intact. Understanding this psychological and market dynamic is crucial for developing effective coping mechanisms. One of the most recommended strategies for weathering market volatility is hodling, an acronym for Hold On for Dear Life. This long-term investment approach advocates for holding onto assets through market ups and downs, rather than attempting to time the market or react to short-term price fluctuations. Historically, Bitcoin has demonstrated a remarkable ability to recover from significant downturns and achieve new all-time highs, rewarding patient investors. Dollar cost averaging, DCA, is another powerful tool for mitigating volatility. DCA involves investing a fixed sum of money at regular intervals, irrespective of the asset's current price. This disciplined approach ensures that investors buy more units when prices are low and fewer when prices are high, effectively averaging out the cost basis over time. It removes the emotional element of trying to time the market perfectly and fosters consistent accumulation. Diversification is also a critical risk management technique. Instead of concentrating all investment capital into Bitcoin, smaller investors can spread their risk by including other digital assets, as well as traditional financial instruments like stocks, bonds, and real estate, in their portfolios. This helps to cushion the impact of any single asset's poor performance. Furthermore, employing risk management tools, such as stop-loss orders, can act as a safety net. A stop-loss order automatically sells an asset when it reaches a predetermined price, limiting potential losses. Staying informed about market news, regulatory developments, and macroeconomic trends is equally important, as these factors can significantly influence price movements. Finally, the use of leverage, while potentially amplifying gains, can also exponentially increase losses. Retail investors are often advised to use leverage cautiously, if at all, to avoid being wiped out during sharp market corrections. The article also touches upon evolving trends like stablecoin adoption and the increasing use of crypto for everyday payments, suggesting a maturing market that may offer more stability and avenues for integration. Regulatory changes are also playing a role, with increasing transparency requirements potentially encouraging more stable, long-term holding patterns among large investors. By adhering to these strategies, hodling, DCA, diversification, and diligent risk management, smaller investors can not only survive but potentially thrive in the often unpredictable cryptocurrency market. So, we've covered market strategies, corporate legal battles, international trends, and investor survival. It's a lot to digest. That's a wrap on another action-packed Bitcoin Bulletin. We saw how investors are strategizing for long-term gains in a volatile market. A major lawsuit was dismissed impacting a crypto giant, and we explored global crypto trends from Asia to public figures. Plus, we armed smaller investors with tactics to survive the crypto storms. Don't miss out on any of these critical updates. Hit that like button, subscribe for more, ring the notification bell, share your thoughts in the comments, and follow us on all social platforms to stay connected. We'll see you next time.